If you leave South Africa to take up employment in a foreign country, then you need to enter remuneration information on this foreign income screen. All you have to enter is the remuneration income earned while working offshore and to select whether the 1.25 million exemption is to apply or not. It's as simple as that. Wintax does everything else for you. The exemption only applies to taxpayers who worked offshore for at least 117 days, of which at least 60 days was continuous. Let's have a look at the first example. We can see the total remuneration is 1.5 million, and we can see the 1.5 million here in the white field, or we can click on the Itemize button to enter the separate amounts into the grid. If a travel allowance formed part of the foreign remuneration, then the itemized grid must be used where an amount is indicated as a Y if it's a foreign travel allowance received. Only a portion of this foreign travel allowance amount shown here may be allowed as an allowance received on the travel claim screen. When we click on OK to close the grid, then the total of the remuneration amounts in the grid will be entered into the white field. If, in this example, the taxpayer spent less than 117 days earning this money offshore, then we select the exemption as N for no or just leave it blank. We can see that there is no exemption amount allowed, and so the full 1.5 million of remuneration earned offshore is added to taxable income. If we select Y to show that the remuneration earned offshore was earned when the taxpayer worked offshore for more than the 117-day rule period, then an exemption of up to 1.25 million will apply to the total remuneration earned offshore, and we can see that only 250,000 Rand is added to taxable income on this assessment. It is strongly recommended that you click on this blue I for Info button and scroll down and read this text carefully. If any income tax was deducted in the foreign country from the 1.5 million remuneration you earned in that country, then you can enter that tax under code 4111. Let's say 300,000 Rand in tax was deducted in the foreign country. Wintax will use SARS's 6-quad formula to calculate how much of that foreign tax you will be allowed as a tax credit. If I bring over the auto summary screen, you can see that if the taxable amount of 250,000 had been earned locally in South Africa, we can see that the tax levied in South Africa would have been this 48,528 Rand, and SARS will only allow a tax credit of this amount and not the 300,000 Rand tax deducted in the foreign country. Obviously, these new tax laws are aimed at those income earners working for extended periods in countries like Saudi Arabia, where there is no income tax. I've now entered 4 million Rand foreign remuneration earned, and I've selected that the taxpayer earned the 4 million Rand working offshore for more than the 117-day rule period. In a case like this, then, even with the 1.25 million exemption, we still have 2.75 million now taxable in South Africa, and the tax due to SARS is considerable.